So there are a ton of patterns that traders use, but the ones we will be covering are the ones we find the most effective and that occur the most often. So let's get right into it, starting with the first, which is the double top and double bottom pattern. Here is where we will be showing the anatomy of each pattern. So first, you have your moving uptrend. Price then makes two same highs. The tops essentially make a resistance level. The swing low here is what is called the neckline. Now, what does the double top tell you from a price action standpoint? Price failed to make a higher high, but instead made a same high, which shows a loss of momentum from the uptrend, meaning a loss of momentum from the buyers in the market. Now, going the other way. You first have your moving downtrend. Price then makes two same lows. The bottoms essentially make a support level. This swing high here forms the neckline. Now, what does the double bottom tell you in terms of price action? Price failed to make a lower low, but instead made a same low, which shows a loss of momentum from the downtrend, meaning a loss of momentum from the sellers in the market. So, this then brings us to our next question, which is, how do we use the double top and double bottom pattern as part of our overall strategy? Also, right now, go to the comment section below and tell us exactly what topics and questions you want us to cover, as we always look at the comments to decide what to create next. Now, these are the 4 core variations to using the double top and double bottom pattern. Let's start with the first, which is the neckline break entry. So you first have your double top pattern that forms. Neckline here because of the recent swing low. Now, once price breaks the neckline and makes a lower low, you would take a breakout entry short, as the reversal and trend change is now confirmed. Going the other way. You first have your double bottom pattern that forms. Neckline here because of the recent swing high. Now, once price breaks the neckline and makes a higher high, you would take a breakout entry long, as the reversal and trend change is now confirmed. So, moving on to the second variation, a double top or double bottom pattern forming at a key level. Now, this is an entry that occurred on Ethereum, and one that many of our members took. So you first need to identify a key level, which you have through these 3 reversal points. As price comes back down, it creates a double bottom pattern at the support level. So again, to confirm the reversal, neckline placed at the recent swing high, and once price breaks through the neckline and makes a higher high, your trend change from a downtrend to an uptrend is confirmed, and you would then take trade entries long through the lower intraday timeframes. Now, to point something out, there was another trend change confirmation you could have used, which was placing a trend line like this, connecting the swing highs, and again, waiting for the breakthrough before looking for trade entries long. Now, going the other way. Again, you first need to identify a key level, which you have through this reversal point here, giving you your resistance level. As price comes back up, it creates a double top pattern right at the resistance level. So again, to confirm the double top reversal, neckline placed at the recent swing low here, and once price breaks through the neckline and makes a lower low, your trend change from an uptrend to a downtrend is confirmed, and you would then take trade entries short through the lower intraday timeframes. This is also a very good example of the many different opportunities there are to enter trades. Some would have entered short right at this point here. Others would have entered short right at this point here, where pattern traders wouldn't enter until the double top pattern formed and then the break of neckline here. All are correct. There are multiple different ways to enter trades based on your style. So what does the double top or double bottom pattern at a key level tell you from a price action standpoint? This kind of entry is of higher quality because you're not just trading a pattern on its own, but a pattern that is also at a key level, which means you also have support and resistance traders looking to enter along with pattern traders, which helps create momentum for the trade and increases trade quality. So moving on to the third variation. A double top or double bottom pattern, but instead of taking the breakout entry, waiting for a pullback entry. So back to the Ethereum example we just covered. You had your double bottom pattern, neckline break, but instead of taking the breakout entry, there was a second long entry on the pullback to the new support level. This is actually a very good level because it was formed way back here. Now, there is a very specific way you must place your stop loss when taking breakout entries, but then a very different way you must place your stop loss when taking pullback entries. So moving on to the fourth variation. Candlestick patterns forming at a key level, and then a double top or double bottom pattern inside of those candlesticks. So you first look for a key level, which you have through this reversal point here, which gives you a level of resistance. As price comes back up to this level, you are waiting to see if you would get candlesticks forming at the level to show a reaction to the level of resistance, which you got through this long wick candle. But a reaction does not equal a trade, as price can stall at this key level, form the candle, and still break right through. Don't forget that this is a very strong uptrend. So what you need to do is after you have your long wick candle react to the level of resistance, you need to look inside of this area on the lower time frames to see if you can get any form of price action that signals a trend change from an uptrend to a downtrend. Now, this is a very key point. Before you look inside of this area, you have no idea what you will find or if you will find anything at all. So let's pull up a lower time frame, specifically the 6-hour time frame, and put it beside this one. So on the left is the daily time frame we just looked at, and on the right here is the 6-hour time frame of the same asset. This resistance level here is the same resistance level here. This area here, where the candlestick formed, is this same area here on the 6-hour time frame. Now the reason we are using a lower time frame is because on the main time frame, where we found the initial setup, price movement is too tight, meaning we don't have good swings that give us good price action that signals a trend change after we had the long wick candle. Whereas here on this lower time frame on the right, we can see so much more data and see the actual swings of price. So what you had on this lower time frame was a perfect double top pattern that formed right at the key level of resistance and inside of the long wick candle from the higher time frame. So again, to confirm the reversal and the trend change, neckline placed here at the swing low, and once price breaks the neckline and makes a lower low, your trend change is confirmed from an uptrend to a downtrend. The breakout here is then when you would go to the lower intraday timeframes to take trade entries short. Now, going in the opposite direction, in a downtrend, this would work the same. So moving on to the next pattern.